What's happening, everybody? Today we're talking about affordability, what that really looks like. I'm also going to cover the last 17 purchase transactions that I've done. I'm going to explain to you who's been buying homes and also how have those transactions really gone in favor of the buyers. I'm putting up this infographic to give you a lot more detail into what that really looks like in a normal person type of situation. So here we go. We're seeing a $300,000 list price, meaning that's how much the home was for sale. To 8-9 months ago, even maybe a little bit less than that, the $300,000 list price, meaning that's how much the home was for sale. Typically, 8-9 months ago, even maybe a little bit less than that, there was a lot of bidding wars going on, so you could see that purchase price escalating up to $340,000. Looking at a 5% down payment, we're assuming a 3.5% interest rate. We're using $283 a month for property taxes. We're using $135 for homeowners insurance, and your mortgage insurance, which you have to carry if you're not putting 20% down, in this example is $131. So as you can see, that's a total payment of $2,003. Not too bad on that type of purchase price. Now, if we slide over and look at more relatively what's happening in today's market, we look at that $300,000 purchase price. Now, because the market has shifted, we're seeing people getting offers on their homes below list price. Around $285,000 is what I'm using. Again, we're assuming 5% down. Interest rate based on what I looked at today, 6.625%. We're using the same for taxes, same for homeowners insurance, and you can see your mortgage insurance actually comes down because it's a lower purchase price. We're using $113. You can see that payment now is $2,219. So it's about $216 more a month. What people aren't considering though in that example, they're seeing a higher payment. However, what they're not considering is because the market has shifted, and you might hear there's still a home shortage, builders have slowed their pace, but there's also less buyers, meaning less competition for these homes. So in the example, for that $275,000 or that $285,000 purchase price, that doesn't factor in seller paid closing costs, which in a conventional world, you can get up to 3% of the purchase price. So that means the seller would pay your closing costs for you. That's happening a lot. I'll give an example in just a minute. The other thing that's coming back is we're seeing home inspections. When someone does a home inspection, oftentimes any home inspector can find a few things that might be wrong, which allows the buyer to go back and negotiate and maybe chip down that purchase price just a little bit more. Now, if we're looking at the last 17 transactions, the last 17 purchases I've done over the last couple months, it's a big swing in momentum for our buyers. So out of the last 17, 9 of them have been government purchases, meaning FHA or VA. If you were an FHA or a VA buyer or even needing down payment assistance 8 months ago, forget it. Conventional buyers only or cash. And if you didn't have one of those, I mean, good luck. It was really hard sledding. But now, 9 out of 17, so that's over half, are FHA or VA buyers. So people that maybe have lower credit scores or they're only able to put 3.5% down, guess what? You have a better opportunity to get into a property, and we're seeing more and more of that as we go into the end of 2022, and we'll see that at the beginning of 2023. Here's the really exciting thing. Out of those 17 transactions, 14 of my buyers were able to get seller paid closing costs. So that's really a big savings for my buyers because they only really needed to come up with their down payment. So that 3.5% or that 5%, depending on their situation. And then on top of that, could you imagine if you're a little bit tight or you haven't saved that much money, now you have to come up with your closing costs, which calculate in your head an additional 3% of the purchase price to cover closing costs. Now, not only are my people getting homes below list price, but they're also getting seller paid closing costs, which it's a great opportunity. If you're buying FHA or VA, both of those programs have a type of streamlined refinance. So when rates eventually do come down, you can't refinance for free, But think of it as only costing a mortgage payment to refinance and drop your interest rate when rates do come down. So if you're worried or you're thinking, well, I'm gonna wait till interest rates come down, well, that's when everybody does it, and that's when you lose your negotiating power to get seller paid closing costs and to get a home under asking price. So if you're looking to buy a home or you're thinking about it, now could be a great time, especially this time of the year and where things are sitting right now. If you have any questions, feel free to drop a comment. Thanks for checking out the video. We'll see you at the next one.